Hello, good day, guys, and welcome to today's webinar. And most likely going to be our final webinar. We are going to be looking at the holiday trader. And today we are covering topics on trade tactics. We'll be looking at daily pre-trade roofing. Also, finally, we'll be talking about ZTradex, or ZTradex offers for clients and also for partners as well. And I really want to thank everyone who has been following us since the launch of the ZTradex Academy down to this point, that where we are currently, the festive season, and I hope you all have been racking enough profits. And we're still going to be here definitely come next year to give you much more in-depth analysis about the financial market, help you better understand how to maximize your profit potentials, as well as to excel very well in the financial market. So sit back, relax. We have a lot to learn. Trading plans are actually very important when it comes to trading generally, during holidays, during normal periods, but most especially holidays is actually really important for you to understand how these things work so that you're able to have the best ideology about how the market moves, how to make calculated moves as well, how to make good entry points, secure profits at the right time, etc. Also to know when not to even place any trade at all. So we'll be talking about all of this today. So pay attention and get the hang of it. So let's move to the next page. Right, now we will be talking about trading for the Chinese economic reports. Now, even though we can arguably say that the Chinese yuan is not one of the commonly most traded currency pairs, it doesn't mean you can make good money out of these Chinese economic releases, because the Chinese economy is so enormous. Its economic events will most likely impact those nations that are closely associated with the ones like, one of these Australia's, and China is most likely like Australia's largest trading partner in recent times. And the two nations been engaging in nearly $100 billion worth of products each year. So this information comes to you very tentative, because it's very essential you understand how these things do work, right? Because the Chinese economic data releases tend to impact the Australian dollar the most among the major currency pairs, right? Now, strong economic data from China typically indicates that the Chinese demand for Australian commodities could well increase, while weak Chinese data could hint at a downturn in trade with Australia. Now, very importantly, since China is currently the world's second largest economy next to Uncle Sam, the United States, of course, its economic standing also has much more like a huge effect on risk sentiment. This means that like a slowdown in China could reduce traders' appetite for risk in higher yielding currencies, as they worry about potential impact on this slump on the global economy. Now, on the other hand, an economic boom in China could mean that positive for risk, as market participants see this as a sign of further growth for the global economy. Now, trade tactics. If you wish that the Australian dollar, just like every other currency pair, usually have this upside momentum when they see the Chinese economic releases and PBOC statements, more often than that, better than expected economic figures from China will lead to an AUD-USD or AUD-JPY rally, while weaker than expected results usually trigger an Aussian sell-off. So PBOC rate decisions are a little more tricky, as these depend on prevailing markets sentiments, So it's more or less best to do your homework. You read about economic analysis, government economic analysis, articles to be in the loop, etc. So let's just have it in mind that trade tactics are actually very important, and they give us a huge advantage when we have to decide how to make moves, make entries, secure profits, etc. in the market. Next page, please. What is a trading plan? Now that you're about halfway through college, here is one very piece of advice you should always remember as a trader. Be your own trader. In other words, don't follow another person's trading plan. It's just like you're in examination, you have got everything you want, you prepared for, and then you get into the examination center and you decide to go with a plan that you didn't even decide to go with in the first place. So just because someone may be doing well with their method, it doesn't mean it will work for you. We are all in the different situations in life, and we all have different market views. We have thought processes, we have risk balance levels, we have market experiences. Very important. Market experiences are actually what build us. You have your own personalized forex trading plan, update, just keep updating, keep relearning, just as the market shows you a different approach. Whatever approach it gives to you, you keep relearning from it, and you'll be at the top of your game, definitely. To the next page, please. Now, you want to be a successful trader. Yes, of course, everyone wants to be a successful trader. And having rock solid trading discipline is the most important characteristic of successful traders, because a trading plan defines what is supposed to be done, why, when, and how. It covers your trader personality, personal expectations, the risk management rules, trading systems. When followed to, a trading plan will help limit trading mistakes and minimize your losses. After all, if you fail to plan, then you already plan to fail, right? Because a trading plan removes any bad decision making in the heat of the moment. Your emotions can consume you when money is on the line, causing you to make irrational decisions you do not want to happen. Now, the best way to prevent it from happening is to minimize. Notice that we did not say eliminate. We used the word minimize, because thinking by having a plan for every potential market action with the right forex trading plan, every action is spelled out. So that in the heat of the moment, you don't have to make any rash decision. You just simply stick to your trading plan. So this is very ideal when it comes to quick decisions, momentum of the market, and the rest of it like that. To the next page, please. Now, the difference between a trading plan and a trading system. Now, before we move ahead, we just quickly need to distinguish the difference between a trading plan and a trading system, because a trading system describes how you will enter and exit trades. The trading system is part of your trading plan because it's just one of the several important parts, that is analysis, executions, risk management, etc. Since the market conditions are always changing, a good trader will usually have 2 or more trading systems in his or her trading plan, and trading systems will be covered more in depth later on in this lesson. And but we thought that it was important to point out the difference between the two upfront to avoid any sort of confusion. Now, why do forex traders need a trading plan? One, a trading plan will make your trading simpler than it would be if you traded without one. So think of when you use a GPS device, you enter where you want to go. It then figures out where you currently are and then shows you how to get to where you want to go. You are able to constantly check on your GPS to see if you're still on the right track. When you make a wrong turn, it knows how to make the adjustments and it points you back in the right direction. Now, a trading plan is your trading GPS. It will show you where you currently are as a trader and will help you get to your destination, consistent profitability. Okay, to the next page, please. Traveling like for instance, traveling without a GPS wouldn't be the smartest idea ever. You wouldn't know how to get to your destination, and it's highly likely that you drive around, lost like a chicken with his head chopped off. But you're probably thinking that one could use an ancient object called maps instead, but we have no clue what it is because trading without a trading plan would be more like the same thing as driving without a GPS. It's a bad idea. And you're trying to get to the promised land called consistent profits. But since you have no way of knowing whether you are headed in that direction, you most likely end up blowing out your account, which is an abysmal move because with a trading plan, you are able to know if you're headed in the right direction. You have a framework to measure your trading performance. And just like a GPS, you're able to monitor this continually. This allows you to trade with less emotion and stress. Now, without a trading plan, this would be nearly impossible because instead you'd be a cowboy trader shooting from the hip, trading by the seat of your pants, relying on your guts, guesses or signals from strangers that ain't trading. That's more or less like gambling. But whenever you trade, you probably end up a nervous, emotional wreck, crying yourself to sleep as your roller coaster account balance grinds at your side. Okay, we understand that just as you see a GPS, you both figure the route to be taken, and you try to judge the process that must have been a break at some point, but your trading plan will define how you become consistently profitable, and will tell you if you're right on track. To the next page, please. Importantly, trading plans are very, very much essential. You know the saying, if you fail to plan, then you already plan to fail. But if you are a trader without a plan, it's possible to know what you're doing right from wrong. You have no way to evaluate your results. You never know how to stop, sucking at your trades. So obviously, a trading plan doesn't and will never guarantee success. But a good plan that is followed will help you stay in the forex game longer than traders who don't have a trading plan, right? To the next page, please. Survival. Now, survival is better than failure, and it should be your first goal as a newbie trader. 10% of new traders don't make it. You want to be part of that special 10% that does not make it. You are probably thinking that, the trading plan, the Schmaden plan, I can be part of the 10% without a striking trading plan. It may be a bit tempting to trade by the seat of your pants, but if you don't develop uh, clearly defined trading plans and be disciplined enough to follow these trading plans consistently, you'll rather end up with much difficulty. You'll be making a consistent money as a trader, but you don't really have to take much chances on this. You have to have a trading plan, of course. So it will give you an upper edge whenever you are making your trading decisions. To the next page, please. Why why is trading discipline the key to consistent profitability? Of course, every trader needs to have the discipline of knowing when to, make entries to trade, knowing how to secure profits, because these things are actually the technical know-hows of a trader who is at the top of his or her game. Because what's wrong, making an occasional winning trade, for instance, even when you throw your trading plan out of the window, may provide you some sort of short-term pleasure, but entering trades haphazardly can adversely influence your ability to maintain discipline in the long term. So I always tell people this: trading is a marathon, the same thing as life. Life is not a sprint. Everything we do is not a sprint, it's a marathon, except for the bad habits, of course. But everything good is a marathon, it's not a sprint. You do it at minimum, come back later, you finish up. You don't just do it all at once. It's a long journey. You have some period to relearn, have some period to relapse, have some period to think and rethink, and have a good ideology of what the market is supposedly supposed to present to you, and know where to correct yourself at some given point, and get better at it. Next page, please. Now, when you stop following your important trading plan, you become rewarded for lacking discipline, and you may start believing that more like abandoning this trading plan is no big deal. An unjustified reward may increase your tendency to abandon trading plans in the future. You may be prone to think, I was rewarded once, maybe it will be rewarded again. I'll take a chance. But the positive outcomes of undisciplined trading are usually short-lived. And, a lack of discipline ultimately produces the long-term trading losses. It's important to distinguish justified wins from unjustified wins, because a justified win is when you create a very detailed trading plan and follow that plan. A win that results from following a trading plan is more or less justified and reinforces discipline. An unjustified win occurs when you make a plan but don't follow it, or if you have no plan at all, you might as well be rewarded, but the outcome occurred by chance. You might as well flip a coin, or hang a printed copy of your charts on the wall and throw that at it to help you make trading decisions. The win is unjustified and can reinforce undisciplined trading. You understand? So it's very important to have your win justified by creating a very well detailed trading plan and follow the plan. Always follow the plan, right? Next page, please. Maintaining discipline also is vital for consistent and profitable trading. Now, trading is a matter of getting the law of averages to work in your favor. You trade proven forex trading strategies over and over, so that across a series of trades, the strategies work enough to produce an overall profit. It's like you're making shot after shot on the basketball court so as to accumulate a winning number of points. The more shots you take, the more likely you will amass some point. But just you look at Kobe Bryant, so rest in peace, or Kevin Durant, and the winning player, of course, is the person who just who first develops the skill to make that shot consistently, so that at every possible opportunity, the ball is likely to go through the basket, and they have developed the skill to learn how to shoot the ball the same way every single time. Consistency is actually very, very crucial. It's the same for trading. One must trade consistently, following a specific trading plan on each and every single trade. If you trade one approach this time and a different approach at another time, your performance will more than likely be haphazard. We can't overemphasize this. We can't stress this enough. Feel me? So you have to allow the law of averages to work in your favor, so that across a series of trades, you will make an overall profit. If you follow the plan, sometimes and abandon it at other times, you throw off the probabilities and you will most likely end up losing it all overall. Okay, so to the next page, please. How to find a trading style that suits your personality. Now, the first step in building a trading plan is to realistically take a whole star view of yourself. Now, the foundation of your trading plan actually starts with your self-reflection, because you will be the only one using it. The self-reflection will reveal your trader profile, which is basically who you are as a trader, right? Now, who you are as a trader all define what kind of method suits you. Strategies, systems, and methods which aren't compatible with your profile and personality will drastically lower your chances of success. So you need to find a trading style that suits your personality very much. To the next page, please. Very importantly, this question goes around most of the time. What is your motivation as a forex trader or being a forex trader? It's Is it because you want to become filthy rich? Is it because of the thrill? Is it because you want to do something challenging and exciting? Or is it because the girl you like trades currencies and you want to impress her? Either ways, based on the size of your head, but it's important to know that what your true motivation is, or whatever you should even be trading at all. Forex traders who aren't serious or committed to the craft will quickly be eliminated by the market. You know, for example, we have seeking thrills, we have seeking consistent profits. They don't really go together. But you might enjoy the thrill of putting on a homogeneous, more like you're betting the fan position, but you believe that you won't be smiling once your trade blows up in your face. So if thrills are what you seek, you have to go to a casino, you have to jump out of a plane, or try driving an F1 racing car. Better yet, if you want a real thrill, you drive an F1 racing car out of a plane and land in a casino. Now that's more like a real thrill, and you might even lose less money than if you were trading. Understood? So let's have this motivation at the back of our minds and get up and have this understanding that the market is obviously for everyone, and everyone has a different way to pick their own motivation and excel at it. You understand? So just have this at the back of your mind each and every day. To the next page, please. Now, what have you determined to be your goals for trading? Mine is that I have a very high taste. So I'm gonna confess I have a very high taste. So well, actually, this can be expressed monetarily using a profit goal. Now, either in currency or percent return per unit of time. For example, you might choose a goal like making $4 million, averaging 145 per month, $145 per month, or achieving a 529% return every week, which is an amazing return, of course, because this doesn't necessarily have anything to do with money. Like my goal for trading is to be able to buy the new Space Jordans, so I can impress my lady crush, fall in love with me, and all of that shit. But there's actually more to it, depending on what people have in mind. I'm just joking about that, of course. Next page, please. What is your risk capital? How much money can you afford to lose? You need to more or less determine if you can even afford to trade. Most people don't understand this. Some people want to come in with very little amount, $100, $200. Well, it depends on your pocket, but forex trading should only be done with risk capital. Risk capital is money that you can afford to lose. This is the kind of money that if you lost, you wouldn't lose your home, you wouldn't lose your car, you wouldn't lose your spouse, you wouldn't lose your limbs, you wouldn't lose electricity, you wouldn't, do anything crazy. So that's what it entails about forex trading. Most people don't get this. Most people think it's a get rich quick scheme. No, you start with what you have, and then you make more out of what you have, and feel the balance of making money from the forex market. So that's just technically what a trader should have in mind. I start with what I have. I don't start with the whole world, you know, and then from what I have, what I feel I have, I try to, make some money out of it and feel good about it, right? So this is what people need to understand about forex trading. Next page, please. Don't be, yeah. So if you can afford to make dough in the kitchen, then you can afford to make dough in the forex market. So you don't start forex trading with real money until you have accumulated enough risk capital. Until then, always stick to demo. Sometimes when I was a beginner trader, made a lot of errors. I got scared at some point, making consistent profits on demo. I decided to go live. On my first two trials on live, I ran back to the demo account, and I made more profits in demo than real accounts, and it got me so confused. I'm like, why is it I make a lot of money on the demo rather than the live account? Well, the demo is always there for you to back test and re-strategize. So when you see you're making a few couple of losses on the real or the life account, it's not something to be ashamed of. It's not something to feel depressed about. You just have a pause. You have a quick pause. You go back to the demo. You back test your strategies again, perfect it, and you come back and you will learn, and you know get right on track again. So that is just it. Later on, we'll teach you all about risk management and how you can manage your risk capital. Next page, please. How much time can you dedicate to forex trading? Well, you need to seriously consider how lifestyle. How much time each day, week, month, whichever is most appropriate, can you dedicate to the various requirements of forex trading? Managing a trading system, your time availability will determine your trading style. The shorter the time frame you're trading, the more time you need in from you need to be glued to the screen the whole time. Next page, please. Now, the longer the time frame you trade, the less you have to watch the market. You can simply check your trade from time to time. Don't forget about distractions. When you say you can trade currencies for 8 hours a day, does that mean 8 hours of your own divided attention staring at charts and analyzing the economic data releases? Or does that mean 8 hours of staring at charts, analyzing the economic data release while cooking your honey bun, some breakfast, juggling knives, playing with kids, watching Justin Bieber on YouTube, following Lady Gaga everywhere, you know, because if you are a scalper, you would probably miss a lot of entries and exits, and end up instead scalping your own head due to your many losses on missed winning opportunities. You also need to dedicate time to developing and tweaking your trading system. Trading your system will require you stare at charts, looking for possible entries, and once you are in a trade, you then need to manage it. You then need to manage it very importantly. Next page, please. Which kind of returns do you expect to make from forex trading? Of course, anybody who's interested in trading certainly has ambitions of racking in some dough, greenbacks, making some money. It all makes sense because trading involves risk, and we expect to be compensated for those risks. So there's no doubt that every currency trader expects to make profit. The question that you should ask yourself though is this: what kind of returns do you expect to make? Your answer to this question will be play a huge role in determining what kind of trading style you will implement, what currency pairs and times you will trade, and most importantly, the risk involved in achieving your goals. So let's look at an example to help explain this better. Let's say there are two forex traders, Bruce and Mike. Bruce is looking to score 10% a year, while Mike is a little more ambitious. He wants to double his account and make 100% returns. Now, how can Mike do this? Next page, please. If he ever wants to achieve these goals of 100% returns, traders will always have to take into considerations what we call drawdowns. Drawdowns is normally calculated as distance from the highest value of your account to next lowest point. We'll explain this a little bit more in the following lesson. For now, let's pay attention in class. Now, each forex trader must decide how big of a drawdown he or she can accept in order to hit their profit target goals. On the one hand, there are forex traders who are risk averse and would rather have small drawdowns. The trade-off is that this will also limit potential reward. On the other hand, there are forex traders who are comfortable with large drawdowns, and just as long as their system also yields huge returns, you also have to take into consideration how much time you can dedicate to trading. If you can't, dedicate a significant amount of time working on your system, reading up on the markets and learning new trading techniques, recording and reviewing your journal, then we can guarantee you that you will have a difficult time hitting your goals. If you can make this time commitment, you may have to readjust your expectations as to how much you can make your account grow. And we highly suggest that you check out more about this in our upcoming lessons so that you can understand perfectly how to deal with this time commitment. Okay, next page, please. What is your daily pre-trading routine? Next page, please. Now, what activities will you do before you start trading? Your forex trading routine should help you accomplish the following tasks. One, reviewing any open positions and making any necessary adjustments. Reviewing yesterday's trades, getting yourself up to speed on the market, identifying any upcoming news that could cause volatility, being ready to trade when the next trading session opens. Now, you will want to review the overall market news. This can be done online, through new financial news website like Bloomberg, or through television, CNBC, Bloomberg TV also. Determine what the overall market sentiment is for the day, review yesterday's trades and how the previous trading session finished, and maybe identify key market areas like support and resistance. Now it's time to start trading your system. Yeah, arguably, it's time. So let's next page, please. Now, you want to start trading forex trading sessions. You're feeling calm, relaxed, and prepared for whatever the market throws at you. Your pre-market routine will be critical to your success as a trader. It will help you plan your day so that you are not spending time during market hours scrambling, trying to figure out what news or date will be coming out and what to do if the market does something you didn't expect. So you need to keep up to date with both the fundamentals and technicals affecting the forex market. A forex trader in the dark is a forex trader in the red. Okay, next page, please. What forex trading software, hardware, and other tools do you use? Well, I will say this: what toys will you use for your forex trading profession? You write down the hardware, the software, the data feeds, your internet access that will comprise your forex trading desk. And don't forget the backups. Make sure you have a backup plan for everything just in case your main tools fall while you are in a trade. What if your computer crashes and doesn't boot back up? What if your internet connection goes down? What if your electricity goes out, laptop and pocket Wi-Fi, etc.? Finally, don't get uh don't get bewildered by all the razzle dazzle currency trading vendors, and try to lure you with, do you really need that 5,000 chart pattern recognition software that displays in 3D Max, etc., things like that? Didn't think so, of course. But what forex broker platform will you use? I advise you Ztradex and Ztradex only, forever. you know, where will you execute your trades? It's not like you can call the bank and say, I want to go long on the Euro USD, but it isn't that simple. You make sure you know the ins and outs of your broker. You choose from executing orders to depositing and withdrawing money and hopefully profits, right? Yeah. So Ztradex gives you a majority advantages. And today we're going to be talking much about Ztradex advantages for clients and for partners. And stay glued in. All I can say, stay glued in. Next page, please. Now, always stick with your trading plan. A forex trading plan is only effective if it's followed. You have to stick to it. It sounds simple to do. It is really just common sense, but most traders still can't do it. Why? Trader incompatibility. A trading plan should be a personalized plan for you, a plan that fits your own goals. risk tolerances, and individual lifestyle. You must develop each component on an individual basis, never losing sight of the fact that it must be custom tailored to you and your needs. Your trading plan must be more or less made based on reality, not on hope. If you're simply trying to copy somebody else's trading plan or yours is based on false assumptions, then you will not be compatible with it and you will have trouble following it. Next page, please. Now, first of all, solution. Be honest with yourself, then revise your trading plan. Trading plans are intended to be long term. Many forex traders give up on their trading plan. I also did give up on my trading plan at the initial stage because I was thinking, these plans are just nonsense. When I get into the chart, I just do what I want. The trading system in the trading plan, after suffering a string of losses rather than sticking it out through the inevitable rough times. Number two, be patient, no discipline. Trading according to a plan requires sticking to it through thick and thin. That takes discipline, rock solid discipline. Forex traders lacking discipline do not stick to their trading plans. You need to be fully disciplined, rock solid. It might sound like we're beating a dead horse, but well, you need to be very, very disciplined and be patient too. A being self-disciplined, staying disciplined rather, self-destructive behavior. Some forex traders have deeply ingrained psychological issues that will sabotage them. This can be resolved with hard work on oneself, but the trader must be more or less self-aware of such issues first. You can't figure out a solution if you don't know the root. If you don't know the root problem, you know, you more or less need to, look in the mirror. For solution, you look in the mirror. Hopefully, you don't turn to stone. If you're personally having trouble sticking to your trading plan, most likely it's one of the reasons that we usually refer to the solution first. So let's have a look. Next page, please. Now, developing a trading plan. The difference between making money and losing money can be as simple as trading with a plan or, trading without one. A trading plan is an organized approach to executing a trading system that you have developed based on your market analysis and outlook while factoring in risk management and personal psychology. Now, no matter how good your trading plan is, it won't work if you don't follow it. Forex traders who follow a disciplined approach are the ones who survive year after year after year. They can even have more losing trades than winning ones and still be profitable because they follow a disciplined approach. Next page, please. Here's a summary of what the key benefits are. One, trading that is simpler with a plan than it is without one. So I didn't say that well. Trading that is simpler with a plan than it is without one. Makes sense, right? Now, reduce stress, which means better health. Ability to gauge your performance, identify problems, and make corrections. A trading plan helps to prevent many psychological issues from taking root. A trading plan has a dare to strictly reduce the number of bad trades. A trading plan will help prevent irrational behavior in the heat of the moment. A trading plan enables you to control the only thing you can control yourself. And the trading plan will instill a large measure of discipline into your trading. Gamblers lack both discipline and a trading plan. A trading plan will instill a large measure of discipline into your trading plan. A plan would enable you to trade outside your comfort zone. How many times have you let a loss run and cut a profit short because it was the comfortable thing to do? A plan executed with discipline will help to prevent this from happening. A plan in your GPS, which will enable you to get from wherever you are now to wherever you want to be consistently profitable. Your trading plan is designed in such a way that if you do take a wrong turn, you will know about it very quickly and have the opportunity to correct the problem before losses spiral out of control. So one last thing before you head off to your to the next class, always remember that trading plan is always will be a work in progress. As things change, the trading plan must change too. Assess your trading plan and processes periodically especially when you have changes in your financial or life situation. Also, as your research leads to changes in your trading system or methods, be sure to reflect those adjustments in your forex trading plan. Okay, next page, please. Now, you have to know the different types of trading styles. Each forex trader has their own unique ways, and there are over 8 billion people in the world, including space aliens disguised as humans, and not one person is exactly the same as another. Even identical twins will have different fingerprints, right? Everyone has their own look, personality, talents, pizza topping preferences. We like pepperoni and potato chips. We are like different things and are unique in our own way, right? Next page, please. Now, trading is the same way. Our unique personality will lead us to trade differently from one another. Some may be aggressive, type A personality traders, while others may be more relaxed, type B personality traders. Some may like taking small wins all the time, while others don't mind losing a bit in order to make those huge gains when they do win. Now, the point is that no two traders are alike. Even if a group of people were to trade the same system rules, each person's end result would most likely be different from everyone else. Is that a bad thing? Not at all. Our uniqueness is what makes the world go round. So it's important to know your lifestyle and personality to help identify trading strengths and weaknesses. Trying to force a trade that doesn't match your personality will only result in frustration and can hinder you from making consistent profits. Next page, please. Your most important investment as a forex trader. A common mistake by many new traders is that they think they can make money fast. While it's true you can make money in a short amount of time, it doesn't mean you will end up profitable in the long run. A typical scenario is that a new trader reacts a little bit about trading forex. You find a system online that claims to make money quickly and then jumps right into trading because he feels like he gets enough of a background to make millions of dollars. Unfortunately, after the honeymoon, period is over and the excitement settles down, the new trader now realizes that trading isn't as easy as he thought. The system doesn't seem to be making or working like it claimed it would, and has no idea why the market is doing what it's doing, as they usually say. The most important thing you can invest in as a forex trader is your time. Every single trading day is a learning experience, and if you stop learning, then you never become a truly successful trader because you take into account how much time it will take you to learn the basics, and then consider how much it will take in your daily routine to read charts, news reports, record your trades, and be in the markets. For someone who can dedicate a full-time job mentality to forex trading, then this is no problem, of course. Because, however, if you're like most people, you may have a job, a school work, lessons, World of Warcraft, so you cannot exactly dedicate your entire day to trading. Each day requires your time to analyze the market because the news makes the market move. It's important to consider the economic developments going on around the world and, to make it part of your daily routine, very importantly. Next page, please. Some important things to consider in your market analysis. Forex market developments. Now, look at what the talk of the town is in the forex world. See what the analysis, or rather, analysts like Nicholas are buzzing about and how the currencies reacted. Always follow us. Yeah, I remember to say this. Always follow us on our daily analysis. They're very vital. They assist you in making consistent profits. Know what's around in the market. Know what to trade. Know how to maximize your profit potential. Get well detailed and well crafted overview of where the market is heading to. So always follow us. Now, also news releases. You know what news reports are coming out each day and how they affect the markets. The more important the news report, the more movement you can expect to see in its currency. So you make sure you check out your Wicked Seek Forex calendar When it comes to market prices of other commodities, the price of oil or US Treasury yields can affect the way currencies move. So it's important to find out why these things are rising or falling and keep that in mind when trading currencies, you know. Then we talk about current events. You know, you check out many news websites and you get to know what is happening across the globe. Events such as major elections, military conflicts, political scandals, this all affect currency movements or global risk sentiment. Finally, after going through your daily economic analysis, you have to look at the charts. Charts will give you insights into key support and resistance levels, trends, and possible price points in which you need to enter into the market. All right. Next page, please. Next page, please. So now, no, the previous one. Right. So you might not be a forex scalper. You might be a forex scalper. Here are the two things to it. If you're not a forex scalper, you can easily get stressed in fast-moving environments. You might like fast trading and excitement. You can commit several hours of undivided attention to your chi. You rather make fewer trades with higher profit gains. You like taking your time to analyze the overall picture of the market. But then you might be a forex scalper, and the following things might follow. You don't mind being focused on your chart for several hours at a time. You are an impatient person who doesn't like to wait for long trades. You can think fast and change bias or direction quickly. You have fast fingers. You put those tackles, you're a surgeon, you know. So some things to consider if you decide to scalp, you trade only the most liquid pairs such as the Euro USD, the GBP USD, USD CHF, USD JPY. You know, they offer the lightest spreads, tightest spreads because they tend to have the highest trading volume. You want your spreads to be as tight as possible since you will be entering the market frequently. So you trade only during the busiest times of the day. The most liquid times of the day are during the session overlaps. This is from 2 a.m. to 4 a.m., from 8 a.m. to 12 noon Eastern time, EST, right? Next page, please. Make sure to account for the spread. Because you enter the market frequently, spreads will be a big factor in your overall profit. Be sure your targets will at least double your spread so that you can account for the times the market moves against you. You try focusing on one pair first. Scalping is very intense, and if you can put all your energy in one pair, you have a better chance at being successful. If you start to get accustomed to the pace of things, then you can start by adding on another pair and see how it works for you. You make sure you follow good money management. This goes for any type of trading, but since you're making so many trades within a day, it's especially important that you are sticking to risk management practices, right? Your major news reports can throw you off because of slippage and high volatility. Trading around highly anticipated news reports can be very dangerous. It sucks when you unexpectedly see price jump in the opposite direction of your trade because of a news report. Next page, please. So that's all about today's uh, training, holiday trader. I guess you'll gain some vital points. Right about now, we'll be moving on to advantages for clients and advantages for partners. If you're a new client, if you're a new partner, if you decide to be a partner with us, here are the things we're likely going to offer to you, or rather, here are the things we're definitely going to offer to you. So we're going to spell them out to you right now in the next slide in a few minutes.